Hello, everyone. Welcome to another edition of Tip Tuesday. This is Geoffrey Nance here with you, covering a topic today called crafting your investment plan for 2024. You might have heard the phrase before that failing to plan is planning to fail. And obviously, none of us want to fail in our trading ventures. So, what does it really look like? So, when you say that we're going to have a plan, what kind of plan? What does this look like? Is this something that I'm, trying to plan out every day, every week, every month, or do I have some big long-term thing I'm trying to figure out? What exactly is a trading plan? So, that will be our topic today. I am going to kind of break that down for you a little bit. But before we get there, let me tell you a little illustration of why I think planning is important and why it becomes very specific and particular to your trading and the potential results that you might see and how this is related. So, one of the examples I use fairly often is that people tend to miss trades and then they get upset about all these trades that work. So, they'll go back into their charts and they'll just see all these things that worked and they're just like, oh, I didn't do that one. And oh, I didn't do that one. And oh, I really wish I'd have gotten that one. Or why did the trades that I do not work like that one? And we end up kind of having this approach that we always miss everything. And so I like to ask people if there's a bus running in their city, especially if we're in a bigger city, it could be a bus, a trolley, a train, or something, anything. The point is that there are multiple things just going around the city at any given time. And I'll ask the people, I'll say, well, did you miss any of those buses today? And the answer is for most people, yeah, we missed, probably almost all of them. And I say, well, how many of those do you regret missing? And they'll normally say, well, none, because I'm where I'm supposed to be. I'm doing what I'm supposed to do. So I wasn't planning on catching any of those. And I say, right, exactly. Now, if you needed to catch a bus to be here this morning and it said it was going to arrive at 8th and Main at 7:45, you needed to be there. You had a plan to catch that bus. You knew what the route was. You knew it was going to take you. You knew how long it would take you to get there. And you knew where you needed to be and at what time. So you had a plan to catch that bus. But if you're not really planning on catching that bus, you're not going to go through the effort to find all of those things. So you're not going to go look at the chart and figure out where this stock is going to go and how much it's going to move and how likely that is. Why? Because you're not really planning on catching that stock. Just like you're not really planning on catching that particular bus. So, like, no one laments missing every bus that was taking them places they didn't even want to go. Now, maybe you say, well, maybe I did want to go there. Well, if that's the case, then you need to plan to catch that bus. All right. So, moving from buses to trades, what does this look like? Well, what we don't want you to do is to go out there and see all these things that worked and then say, well, I missed all of those trades, because that doesn't make any sense. You weren't really trying to catch all of those trades because you had no plan to be there at 8th and Main at 7:45. See, so I don't want you to take that approach, well, I missed all these things, when you had no real plan to catch any of those trades. So what does it look like then to have a plan where I can say, you know what, I'm going to accomplish this, 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 and this year? We talked about goals last week. So now we have goals. Now let's talk about a plan. So first thing I would say is every night before trading the next day or every morning before trading opens, you need to have a sense of what the S&P is likely to do. Now, you might go to bed with certain expectations. We did last night. I mean, great example of this. The market had a really explosive day yesterday. We thought, well, it would probably continue up. Now, it's not uncommon after a big day like we had yesterday to see the market pull back. So it's not like totally out of the blue. It didn't catch us like totally off guard that the market's down this morning. But again, it is a little surprising because it's not exactly what we thought we would see today. It doesn't mean it just blows up everything we talked about, but it does mean that we have to change our plans a little bit. So the buses are running behind. We have to shift a little bit. We're going to have to wait a little bit longer. We're going to have to do some things a little bit differently. We may go look at some different trades and say, you know what, there's a better route over here. So this trade might look better than another one at this particular time based on what the market's doing today. That's possible, right? But we still need to have a plan. So before you go to bed, have an idea, what is the S&P likely to do, and what does that look like? Then you either go and pick out trades. I like to use the number 4, okay? Particularly when you're uncertain as to direction. So 2 bullish trades where you think the stock is going to go up, 2 bearish trades in case you get a day like today and you say, well, I want to hop in there, take advantage of a move down, or maybe this is a sustained move down. It's not just a simple pullback. If that's the case, I want to have some trades set up to where I can hop in there and do that. So two bullish trades, 2 bearish trades that you're ready to roll on early that morning. Then the next thing you want to do is to kind of check the futures. Now, if you're not familiar with the futures, one of them that I use is actually it's a CNN pre-market. Pretty good, I think. Pretty solid on getting those numbers pretty accurate, really. So the S&P, when I looked this morning, was down about 27. They had the futures down about 27, so it was spot on there. And more often than not, they're pretty accurate there, so it's a pretty good resource for that. And basically, the futures are going to give you an idea where the market is going to open, up or down, and then to the number. Now, it's not going to be exact every time, but sometimes it will be. So that'll give you an idea where the market's going to open. And then you want to go into your charts. Now, if you want to, you can also read the market alert. So you go in there, you look at the futures, you look at your market alert, get a sense of the big things that might be impacting the market for that particular day. Go in there and look at the S&P, go see what your individual stocks are doing. And then if it's time to go get in a trade, you're ready to get into a trade. But see, you've already made a plan. You said, this is the stock that I want to be in. If things are aligning, I want to get in this trade, and I want to get in this trade at the right time. So you have a plan, right? You have a plan, and you've gone through the process. Now, once you're in the trade, of course, now you're going to continue to plan through that trade. So every trade that you're ever going to enter is going to have multiple steps. And the key things that we would like for you to have is your entry. Is this a good entry point? How do we determine whether or not it's a good entry point? Well, we're looking at it from a risk return perspective. So is the amount of profit I could potentially make greater than the expense I would have at my stop out? So in order to know that, we have to know our target and our stop out. So that would be the next thing that we're going to go through. We're going to say, okay, so I'm looking at this from a risk return perspective. Can I make enough, or in other words, win big and still lose little at this buy point? So does this entry allow me to win big and lose little? What we're going to do is we're going to look at our target. How far is this stock likely to move in what amount of time? And where would I stop out if it goes the opposite way? So now we have a plan that once we get in the trade, we're going to execute that thing. So it's either going to go up to our target and we'll sell, take profits there, or we'll go down to our stop out and we'll stop out there and say, well, this trade didn't work. Then we can go in and evaluate. So that's the next part of the plan. So once you finish the trade, you go back and then you evaluate. What did I do well? Was there something I could have done differently? So we can either do that personally, or if we have access to coaches, we can, either email in or call in and have another opinion and have somebody else take a look at that and say, no, you actually did pretty well. Maybe getting in a couple of days earlier when it turned at the 50-day EMA would have been better, but your buy point wasn't, terrible. It wasn't the best, but here's why. Your stop out was good. You did what you're supposed to do. This trade could have worked. It didn't. Let's evaluate why. Well, the market tone went south and you were in a bullish trade, and it's hard for the, individual stocks to fight the market tone unless they're really strong. So this is probably really nothing more than that. Let's try to get a little bit better buy point next time. And then just realize when the market turns on you, that's a really big deal. That's why we're trying to go with the flow. So now you come in there and you do the evaluation, then you do the tweaking. So is there anything I need to tweak before I do something similar like this in the future? So again, that's part of our plan, right? So we're going to learn, we're going to apply, we'll evaluate, and we'll tweak. So as you assess your plan, this is something that you're going to be consistently doing on every trade that you make, right? So it's just over and over and over again, right? This is the same thing. So we learn something, we go apply it, we evaluate, we tweak, right? And so now we're going to keep doing this. And this is part of our plan, but we're going to have a stop out, we're going to have a target. Where would we vary from our plan? So if we have the plan set up, what would a time look like? What would an opportunity look like where I would diverge from my plan at all? Well, what if I get in a bullish trade? Let's just say I was in a bullish trade yesterday, and then all of a sudden, and rather than going up a little bit today and tomorrow, the market actually falls quite a bit this morning. Do I get out of my trades? It hasn't hit my stop out. It hasn't hit my target, certainly. But would I get out of that trade? And here's what you want to do. Now it becomes an individual assessment. So how much is my stock falling? Is my stock down 20 or 30 cents? Okay, not a big deal. I'm going to hold on. That's not a big deal. It's not like they're selling. Well, my stock's down about $2. Ooh, man, that's a lot. That's, oof. Yeah, all right. Well, at this point, is the market going to turn? Is it kind of flattening out? Is it going to, continue to fall? Now I need to evaluate that. So what we would do is to say, all right, obviously I was in a bullish trade. It's very clear at this point, this isn't just a temporary drop. This isn't just a little bit of profit taking. This is a reversal. If that's the case, then you're going to need to go out there and say, you know what? No, I need to go ahead and sell early. So that means either taking a smaller expense or taking a smaller profit to say this trade just simply isn't going to work. And then sometimes part of following our plan is recognizing when the plan isn't working. So there's no need to go and just kind of beat our head against the wall and just say, well, I got in it. I'm just going to stay in until this happens or that happens. There is value in that, trying to stay in until it hits your target or to where it stops out. But the market tone is always a factor. And so if at any point the market tone becomes overwhelming and it substantially and significantly and clearly impacts our individual trade, it's okay for us to vary our plan a little bit at that time. And then long term, guys, your plan would be to say, how am I going to continue to improve? How am I going to get better? And am I seeing better results over time? So with the type of trades that I'm doing, with the strategies that I'm using, am I getting the results that I want? And if the answer is yes, then continue to do those things and consider doing them more often and with more money. But if the answer is no, then don't continue to do something that isn't working. That's not a working plan. We wouldn't want to do that in any area of our life, just to say, this thing really isn't working. Let me see if I'll keep doing it, if it'll get better. It won't, and neither will our trading. So the last thing we want to do is to recognize how our individual trades fit into our bigger plan. So we have big goals, right, that are part of a bigger plan. How did my individual trades from a month-to-month basis fit into that trade? Am I doing things well? Am I getting the results that I want? Do I need to pull over and ask for help? Or am I going in the right direction? I'm just going slower than maybe I would like. We can, again, kind of evaluate where we are, get some help if necessary, and then continue on our journey. So we want you guys to have a very fruitful 2024. We want you to have plans. We want you to stick to your plan. Jared Russell says this a lot. He says, plan your trade and then trade your plan. And the idea here is that once we have an idea of what we're going to do before we even enter a trade, then that's the least emotional we're going to be about a trade, is before we ever get in the trade. Well, if we've already set up our plan, we planned our trade, now we need to trade our plan. Stick to your plan. Do what you're supposed to do unless something happens where you say, yeah, I really need to do something different, and here's why. Otherwise, let's try to stick to our plans. Let's evaluate our plans. Let's see if they're working. And if we need help, let's be humble enough to ask for help, get another pair of eyes on that, somebody who's been doing it for longer, has the experience to come out there and help us reach our goals. So don't forget, guys, that one of our big goals at Tradeway is to help you reach your goals. So anytime we can do that, let us know. We appreciate you. Thanks for being on for another Tip Tuesday, and we will see you next time.